Hi everyone, Wade Bekesi. This is the Organic Podcast number 4. We have 2 guests today, and we have a very special guest, Donald Trump. Welcome. So this is going to be exciting. We have Tim Hudson also from HT Capital.
G'day guys. How are you going? Hey
Welcome.
Don.
Thanks for coming along.
No problems. No problems.
It's great to be here.
I don't know if our audience is going to be happy that you're here or not, but we'll find out. As you know, I am, so it's great to have you here, Don. Thanks.
We like to be a bit divisive, bit throw a spanner in the works.
That's right. That's right. This side against this side. Is that right? Just want to get into the bottle of organic wine that we have today. We've got a Yangara from the Estate Vineyard. It's a 2018 McLaren Vale Grenache. So it's an old vine at Kangarilla, South Australia, McLaren Flat Road. So thanks guys for bringing that along. Don, I'll give you the honours. You can pour us up.
Cruising it, yeah, well done. Do you drink red, Don?
I drink it.
You been to McLaren Vale?
I like to drink
Are you going to be okay pouring that, Don? We need to get Tim to do that. Maybe it's better if Tim does that.
Yeah,
We'll bring that closer.
thanks, mate.
Right, this is fine.
Okay.
We're going to unveil the Don.
It's probably easier for Don to talk without being
Oh, boys, this is...
So have you been drinking any organic wine?
No, I'm not an organic wine drinker. No.
Okay, so
I like the hard stuff.
You do? That's right.
So Grenache is my
Yes.
current favourite wine. It's the heavy South Australian reds, the Cab Saz and the Shiraz, kind of gives you too much of a kick in the head next day. The Grenaches and the Tempranillos and the Sangioveses just can't.
It's a little bit calmer, yeah, okay.
McLaren Vale just do it well. Very dry, warm climate down there, so it's just perfect with the maritime influence. I haven't tried this one, so it could be crap.
Well,
Could be
cheers
shit.
for it.
Yeah, cheers.
Thanks for coming along today.
Thank you very much.
Thank you.
Most of the things are bad wine, just better wines.
No,
That's right.
exactly
Anything
right.
from South Australia is good.
Tastes like wine to me.
It does, that's
With a
right.
hint of organic.
Yes. You can't feel that salt. Damn. All right. Well, thanks, Tim, for bringing along the Don. So I suppose tell us a little bit about HT Capital and sort of, I suppose, probably for our audience, they probably want to know what's been happening in the last month in regards to finance.
Exactly.
And
So HT Capital, very simplistically, we're finance brokers. We specialise in looking after the SME businesses and the finance requirements of SMEs. So that's predominantly working capital funding, commercial property funding, acquisition funding for clients that are looking to acquire other businesses, asset funding, so if you're looking to expand your plant and equipment, all the way through to we service a multitude of sectors in the commercial space, but then the team also looks after the business owners that are related to those businesses, so with homeowners and things like that. So ultimately the mandate of HT Capital is a high touch relationship model. We deal with the banks on your behalf. A lot of our clients have multiple funders across a broad range of major banks, all the way down through to private funders. Funding at the moment is tough, so we're known.
You've got a bit of hard work to do.
Yeah, no, we're known for.
That's what you're good at.
Yeah, we're known for finding solutions. So the tougher the market, the busier we get ultimately.
Okay.
We're finding at the moment a lot of clients that typically haven't used brokers are reaching out because the banks are under the pump. They seem to be under-resourced.
They've only got a sort of a tunnel vision.
They've
The
got-
bank.
They've got tunnel vision. They've deployed a lot of resource. You know, they've been beaten up recently in a multitude of ways by the public and the government.
Previous to the
they're a bit of a they're viewed by the government and the public at the moment as a bit of a social welfare type organisation, and they need to reach out and look after their reputation. So they put a lot of time and investment into their COVID response.
Sure.
But in doing that, it's left a lot of their businesses that are still growing and thriving in this environment, probably without the support that they need, because they're not just going to stop and wait for things to turn around. So that's where we're getting busy. The real busy stuff is in the manufacturing spaces, infrastructure, so a lot of clients with government contracts, a lot of civil works type related work. Okay. And then a lot of our clients are generally pretty wealthy people. Not all of them, or they're most of them are on the way to that wealth generation path.
Yes.
But they don't like standing still. So they're always selling a property, buying a property, doing a development, having a crack at something. Yeah. So that's what we do.
Yeah. Excellent. Well, thanks for coming on.
So I know a truckload of brokers. Some of them I don't particularly like. What's different about HD Capital compared to 1,000 other brokers out there?
Yeah, I think probably the main difference is we pride ourselves on playing the long game. We won't push a client into a transaction for the sake of it.
Just to turn over.
If we don't feel like it's in the client's commercial best interest for us to put a proposal in front of them, you need to sell it to us, and then we'll be 100% on board. So we don't play a short game. We like to develop long-term relationships. We've only been in business for 2 years as HT Capital,
yes.
but really it's what we're looking for is high touch, active, engaged clients, whereas a lot of other brokers will sell on best rate, price, set and forget.
And it's a turnover type.
Exactly right.
That's
and
right.
yes, if that's your mandate and you're in a position to demand the best price and you engage us and mandate us to do that, we will do that.
Of course.
But it's not our everyday bread and butter.
So
Yeah.
it's a bit like your golf, no short game.
No short game. No short game at all. Good off the tee.
Have you been playing a bit of golf lately?
I got my handicap down pretty recently whilst we were establishing HD Capital. I had a fair bit of time, but fortunately, been a little busier of late, and
Yes.
my handicap's going in the wrong direction. So it's gone in the wrong direction, probably in line with our business revenue. So it's probably we could probably graph it later, Dom.
Based on golf, that's right.
My golf handicap to our business performance, to HD Capital's business performance. Yeah.
And so, Don, how are you finding things in the US?
Well, we're going beautifully. Record numbers everywhere. Record retail sales.
Well, that's because you do
last
so
month.
many tests. Is that right?
Well, no, we're going to calm that down.
Oh, yeah, we don't report so many tests, all right? It's ruining the rest of the world. Come on.
No, we're on top of that. I had a good chat to my mate in Brazil the other night, and he's in between coughs. We're fucked.
Is that right? Jeez, okay. So, should Australia be relying on the US for economic development in the future?
Yeah, it's a good question because, again, throughout decades of following the markets, you always look to the US as big brother, where they set the tone for equities, they set the tone for interest rates, and Trumpy has thrown everything up in the air, and the correlations between rates, equities are still there, but you kind of think, what's their direction? What's their path out of this? And I'm no doctor, but the herd mentality of the US, the effective herd mentality of the US, it's an experiment that I don't know how it will pan out. I suspect.
So you're just rolling the dice at the moment, is that what you're saying?
Oh, I am definitely wrong.
I think, and to I guess I should give you some context behind the Don.
Why we brought Don in.
So there's a side business to HT Capital. It's not a business; it's really a community service.
It's an information service. Is that right?
Exactly right. That my business partner Mike Tate, who's unfortunately couldn't be here today because he's on the 9th hole at Mount Osmond.
Oh, I thought he'd be right now on the deal.
Yeah, no, not our Mike. So Mike and I really were looking for something a little different to communicate with our client base and prospective clients. So what we decided to do was invest in a web platform called Incognito. It's Incognito Market Analysis.
Incognito, okay.
So you can check it out, incognitomarkets.com.au.
We'll put the link in.
Yeah,
cool.
Chuck the link in. We haven't formally launched it yet. It's a soft launch. It's live. You can check it out.
Okay.
It'll be up and running probably next week from 100% tickety boo. My mates at Digital Noir tell me, Sam Davies.
Yes.
So the idea behind it is probably a couple of blogs a week, just outlining market movements, market trends, what's happening overseas.
Good for the business owner. Good for who's the sort of
for the business owner. So if you've got a small business and you're exposed to foreign exchange fluctuations, so you need to be aware of what the Aussie dollar is doing.
Okay.
So if you're an importer or a wholesaler,
selling wine, for example,
selling wine, exporting wine, you need to be on top of that. And what this site, you don't have to be an expert in it, but what this site, what these blogs aim to do is be informative, but short, informative, educational, and
just to keep you
bring the barriers down, but truthful as well. So we don't want to, we're not towing any rhetoric. We're not towing the line. Often, every time a bank transacts in foreign currency, they make money off you.
Yeah.
And so it's in their best interest often to stimulate more transactions. So not saying it's a wrong thing to do or the right thing to do.
That's the business model, right?
But our site, which is where the Don comes in, is designed to keep the Don behind a veil. You don't know who he is, but he'll say what he thinks.
That's right.
And so you can ask him right now, hey, if you've got $2 million of debt, would you consider a fixed rate or not? You know, knowing that if he takes a fixed rate, the banks are going to make more money off of him.
Yes.
But would you do it? Would you take a fixed rate
question.
at the moment?
No, I wouldn't.
No? There you go.
Well, Reserve Bank has taken the decision away from me because they've said rates aren't going anywhere for 3 years. So you sit back and relax. But with the longer term rates at sub 1%, as long as you did a forward start, why wouldn't you? Because potentially, I don't think we can go negative rates. So if we do go, if there is
when has negative rates been introduced?
Europe.
Is there a few years back, isn't it?
Yeah, there's still a few.
They still have
negative rates.
Yeah.
We don't hear about that too much here in Australia, especially not South Australia, right?
No, and
Negative
most of the Aussie documentation for the big banks is down to zero. As borrowers, you only get down to zero.
That may be the best we're going to get. If they were paying us to borrow money, I'd be quite
As a
happy about it.
depositor, we'll certainly will go negative.
That's right. Exactly.
But no, look, I think it's important for us to. The Don comes from a background of treasury and markets,
Okay.
and very senior advisor to a lot of large borrowers, so people with debt circa 50 mil plus. So what I can add to my SME client base is, okay, well, let's look at what the larger corporates are doing from an interest rate hedging perspective.
Yes.
And apply that to your personal situation. So,
okay.
you know, the large corporates, this is their view, this is what they're doing, this is what they're doing, this is what they're transacting on.
Do we do what they do? Or do we decide
do
to go the opposite way?
Do we do something separate? And the same can be applied
And that's what we're going to take from that information, or what we can take
exactly.
from that information.
And it might, and the decision might be to do nothing. And that's but you've got to consider it.
And the linkages between all those asset classes are difficult, but they're there. You know, between foreign exchange, between interest rates, and into equities. And so people say to me now, can we swear? We can swear, can't we?
You can swear if you like. We might have to bleep it out.
Why the fuck are equities going higher when...
The Don doesn't swear though, sorry.
Oh, I think he does to Ivana. Behind closed doors.
Did you bring
In the
Ivana?
middle of the night.
You didn't bring Ivana?
Melania, it's Melania, isn't it?
Melania.
That was the previous.
Oh.
You're thinking.
It's like your personal life, but not your real personal life, actually.
She hates me.
You're playing this too well.
That's right, you're still going back.
Why the fuck is equities holding up when they shouldn't be? I looked into it, and on incognito markets, the only thing we really sort of nailed into it is there's so much cash sloshing around that if you had a couple of $1 million, would you would you buy property? How's that going to play out in the next 6-12 months with tenants moving out, with banks probably not taking up as much space as they were, blah, blah, blah. Would you sort of go into fixed interest? Probably not when you don't think interest rates are going to go anywhere for the next couple of years. So you've kind of got a lot of cash, nowhere to go. Equities seem to be the default position. So equities could hold up quite a bit longer, as we were talking about.
Yeah, with the young.
And go into a little bit more detail about the equities market from a smaller perspective of how somebody.
Well, we were talking today. We were talking today with young Thomas in the office because how old would Thomas be? 20 odd. Annoys the shit out of me, Thomas. Love him to death. Hey, Thomas.
Hey, Thomas.
Massively into Afterpay. Bought them at 11. They're at 60, 70.
Oh, I'm loving it.
And just had, the Don.
Remember this bit.
The Don had a bit of advice for young Thomas, which you put.
There was a quote, I can't remember who said it was, I don't think it was Greenspan, but it might have been Buffett, but the quote was, the market can stay irrational longer than you can stay liquid. So in other words, you might be right, but you're going to get fucked over eventually if you stay in that position, because if the train's going north, then get on that train, because that's where the weight of money is going, and that's what's happening at the moment. The weight of money is equities that go north, even though common sense says sell, sell, sell. So personally, I'm absolutely torn apart between do I go short, do I go cash, or do I just hang in there on the equities, and being Don, I'm doing a bit of both. I'm just hanging in there, staying on the fence. So I don't know. I wouldn't be a buyer of equities. Afterpay, that smells a bubble to me. That smells a bubble.
I thought it was a bubble at like $10, let alone 67.
Well, what I don't
so I've actually bought it and sold it since then.
what I don't understand, you might be able to fill me in with Afterpay, is why aren't there bad debts skyrocketing in the current climate? Is it the tenor of the loan? Because they're absorbing the risk, aren't they?
They are.
Yeah, most of
I'm assuming that they're continuing to pay the debt back. And
How are their clients paying this
fees.
debt? How come their bad debts aren't in correlation with other?
Well, it doesn't get reported.
It doesn't get.
It doesn't get reported.
Their churn is about 8 or 9 months for a debt.
A customer.
So the average debt is 8 or 9 months. So it's pretty short term.
Yeah, but something that they borrowed $300 for, they end up paying $600 to $900, and the customer's happy with that, even though that's not realistic, and then so is the company, obviously.
I mean, again, related to that was an article that was on Incognito Markets website recently, where we looked at credit card interest. Is it too high at an average of around 20-21%?
Is it still that high, isn't it?
Yeah, well, it is. It's unbelievably.
Some people are paying 20.
Yeah,
most credit cards
no
aren't that high.
one's lowered it down. You go, that is surely.
I don't know. I haven't checked the credit card interest for a while.
Headline is that is an absolute rip-off.
Oh, of course, if you're paying that much. Is it still cheaper than Afterpay?
No, well, it probably is. But
Depends on how you use it, right?
But the nub of it is you don't pay 21% if you pay it back in a month.
So you can pay nothing. Right?
So there's only about half the people that ever have
They'll
credit.
fill the balance at the end.
So you kind of think, well, the average rate's then not
10.
21, it's 10.
Yeah.
But then surely banks then justify it by saying bad debts are horrendous in credit cards because it's unsecured debt, albeit it's usually connected to your home loan and everything else anyway.
That's
but
right.
The bad debts on credit cards for the banks is 2/5 of fuck all and going down. It's about 1 basis point.
Okay.
So it's,
This is comparing, say, back 10 years ago or 20 years ago. How are we talking?
Well, it's just recently topped down to
It's coming
trailing
back
off.
down.
And I guess it's feeding it back to the justification for the rate. So the lenders will say we charge 25% because the bad debts are horrendous. We need the return. But if you actually look at the return, if you look at the bad debts and the returns,
It's not that high.
it's not that high. So this is the concept of incognito. You take credit cards. So we dive into topics like that, and try and just shed some light on them. Or as the Don says, a laser beam.
But will Afterpay and FlexiPay and those new startups start erode into that market for banks? Will they need them to respond to a more competitive rate?
Quite possibly. Yeah, I hope so.
Yeah, absolutely.
It's a good point.
Yeah.
Yeah. And now back to the equities market. I was recently reading a book on Nick Leeson that took down the bank in I can't remember
Singapore?
the name. No. Oh yeah, it was Singapore markets, equities. But
Great personal friend of mine, a good bloke.
do you know Nick Leeson? Tell our audience a little bit about him.
Was that the 666 account or the 999
Yeah, that's the
account?
one. Yeah. Triple A. It's 5/8. 5/8 account.
Oh, the 5/8 account.
Yeah.
That's,
Triple six.
that's a whole different way.
That's my account. That's almost full.
Yeah. He borrowing $50 million a day to cover the short position that he was running against it. Yeah, collapsed the whole bank. Yeah.
Some of the bank's biggest losses, even within Australia, some of our largest institutions' biggest losses are foreign exchange losses, where the banks have let big corporates drift out and continue to take position after position and not deliver on contracts because they're out of the money and they rack up a huge liability and they've got to be crystallised.
And they allow it to go. Yeah,
But
it's amazing.
Leeson's a classic because it's the age-old story of everyone looks the other way when you're making money. When his position's looking good, and it's,
That's right. He was like the best trader in the world at that time.
Absolutely.
Then any sort of little misdemeanors were overlooked. The minute it turned around, it wasn't because he was caught by an audit or by just his position turned, he couldn't hide them.
Yeah.
Oh yeah, and then the market and Incognitos started reporting on it.
Have you seen the movie?
No.
It's a cracker.
Oh yes,
Absolute
sorry, I have.
cracker.
I didn't realise it was on him until afterwards. I'm like, okay, that's the same guy I'm reading the book about.
Yeah, it's a good
Yes.
one. No, so it's a great movie, that one. Highly recommend it. Up there with The Wolf of Wall Street.
What is the title of that one?
Oh, Rogue Trader?
Rogue Trader is Rogue Trader. That's right. Yep, that's the one.
Jeez, that was...
Yeah, very good. I was trying to think of the name of the book as well.
So Wade, how's your business going?
Oh, my business. Which one?
Right,
This business, the podcast. Yep, it's going very well.
apart from that last drop of the mic.
Yeah, drop the mic. That's good. Yeah. I suppose we're not here to talk about my business. That's not the point, Don.
Don asking me tough questions.
That's right. No, but in a sense...
It's just related to my world because you look at Victoria now,
Sure.
20%, 25% of the national economy has gone into lockdown Mark 2.
Yes.
I don't know, we were talking on the way here, would be stupid for every other state to say they're not going to have lockdown Mark 2.
Yes.
So what's that mean for the economy? What's that mean for recovery and bad debts? And
Well, if we're talking about that business, the collections business, it's been tough because the referral of work from clients, the change in legislation, obviously it's a customer-focused approach at the moment, so that means less cash being referred for recoveries.
yeah, but that's more government legislative rather than what's happening on the ground in the field.
Oh yes, so if you're talking about the collections business, we're doing procedures where it's not running like it was before.
Yeah,
That's
it's
for
quite
sure.
amazing
We're
because
changing what we're doing. We're even offering services of customer service type work. We're outbound call centre, inbound. So we're becoming a contact centre rather than a collections late stage recovery business. So we've changed our model.
We one of the first. So if you're looking to change banks if you're looking to be a new to bank client for an institution at the moment, one of the first things they're asking for is an aged debtor listing ultimately, and we see a lot of them, and it's interesting to note the days that have been pushed out on the debtors, and if
Are they actually increasing? Because some of my clients are actually less.
well, yeah,
They've brought that down because the larger corporations are paying at 7 or 14 days, so they're actually
larger corporations are, but the small businesses need to push from a cash flow perspective, and they are,
as they always do.
and they're
always running on that.
But I think on average, the debtor days, and I was reading an article, I think they generally drifted out between about 4 to 5 days the last few months, and it doesn't sound like much, but from a cash flow perspective, if you put that into your business cash flow modelling, it smashes your cash flow. If your debtors go from 30 to 35 days, it smashes up your working cap. And I think that's really important to acknowledge, and a lot of small business owners don't
they wouldn't even
understand
review that part.
They just don't know why there's not money in the account. So, and we're working with a lot of clients in that regard to say, there's facilities out there that can help them too. So we're doing a lot of debtor finance, where we can get money against those debtors to keep the show.
Yeah.
But there's and a lot of our clients take debtor insurance as well, and the premiums on those are going up quite aggressively as well. So it's a different world, it's a different landscape.
So the word I hear is that whole of bank changing. So if you went from CBA to ANZ or Westpac to NAB or whatever, it's getting very difficult. The big banks have kind of shut up shop and said, we look after our own now and we don't want anyone new. Is that what you guys are hearing?
It's got to have a ribbon on it. So if you're a larger client and you're looking to change institutions, you need to make sure your own backyard is very clean. No ATO arrears, account conduct's perfect. All statutory repayments are up to date. There was
no deferrals.
No deferrals. So when we spoke about this, the deferrals are there. The deferrals are there from your current financiers for a reason to assist, but it does take you out of that refinance market quite quickly. But you know, it'll come back as they kick back in. But that's one of the first questions for any alternative finance. Have you deferred your existing repayments? So you know, a lot of clients have and they haven't needed to. So we have spun a lot of arguments to say they've done it from a cash flow preservation perspective. They're in a much stronger position. If we can account that to say the business actually hasn't been affected like they thought it would be, but they did it.
They did it because
it was a sensible idea to do it from a cash flow perspective, and they were doing it for the right reasons, to look after their staff and look after their clients.
I think if someone goes bankrupt in this period of time, in a couple of years' time, will the bank see them as a risk or not? I know it's going to be interesting. It's because you know, like COVID happened. It wasn't my fault. It wasn't my decision. You look at the Don.
Yeah, back in the Don's home country, you can just hand the keys back and go again. The Don, you yourself have done that a few times.
On my Florida holiday, I own a couple of hotels. Yeah.
That's right. Yeah.
I forgot about those.
They were underwater from the day you took them anyway. But no, it's going to be.
But we don't get it like the US. We don't have that.
But I think the other thing is, and I want to talk about the price of debt today too, because the price of debt is so cheap, but it means nothing if you can't access it.
Can't access it, and there's not that confidence to let you borrow.
Exactly right.
Yeah, but on the flip side, the cost of debt being so low will probably, I imagine, keep a lot of businesses alive, because what was costing them 15% in 2009 is probably costing them 3% now.
Exactly, so they can ride it out longer.
Look, and there are some industries that the banks are really keen on. You look at professional services, so you've got your accounting firms, your legal firms.
Anything that didn't have to go for JobKeeper, I'm assuming.
Yeah, exactly. You know, primary production, agriculture, the banks are still very competitive and they are doing new deals. We just did you wouldn't believe it looking at me.
Talk you up a little bit.
Oh, absolutely.
Yeah.
Thought you'd never ask.
I could see Tim was like,
croaking up. Might need a Rona test.
You know what?
You got to. But you know, we actually did a large agribusiness refinance recently, and you know, and the overall outcome was you know, well secured term debt on agri property, you know, and then the rates are well below 2%. So the right client.
It just doesn't seem real when you're saying that. It's 2%. I don't look at rates every day like you do.
No. I mean,
realistic.
I look at that, and it's a commercial. That's a commercial enterprise. You know, a lot of agri clients forget. You know, they neglect that. They are operating actually quite a complex business. Yes, they're great at what they do, but they need the right financial management in place to do that. We're fortunate with the small, you know, with the agri clients we have on our books, they're very financially savvy. But, the outcome was a competitive tender process with the majors, and ultimately we procured offers from all the majors, and the outcome was well below 2%. So you probably. Fantastic. Between 1.5 and 2%, let's put it that way, for a large liquor debt. So where you do meet all those hurdles and you do have a very clean backyard and you are very bankable, you can drive an incredible bargain at the moment. But if you're not quite there, it's probably not worth testing the market right now. But what it is worth doing, especially from our perspective, getting in contact with us and playing that long game that we talk about. To saying, okay,
could be a year, could be 2 years, but when we're ready,
let's clean this up. Let's get the gearing within these parameters. Let's do X and Y, and then we'll put you out to tender, and your rate will go from, assuming the
whatever
rates
it may be,
remain the same. Rates will go from 6 to 2. So, and that's a huge impact on a business like that, and it's a huge incentive for them to say, you know what, we need to take the financial management of this thing much more seriously than we have in the past. Because in the past it's been, we'll fix that account excess up.
Let's just think about the goal and grow the business.
Yeah, exactly right.
Tidy that up afterwards.
Yeah, but it's, you know, horses for courses. So it's clients are in different positions, and then on the flip side, we've got clients that have business opportunities that are too good to pass up, and they're happy to pay 15% because ultimately their returns of investing a couple of $1 million in this venture are going to outweigh the cost. Well more than 15%. And if it means they don't have to bring in other equity partners, and they can do it via some, and that's non-bank debt, by the way. That's private money. But there's
opportunities out there like
when the Don talks about lots of money flushing around into the equity markets.
You're talking about private money as well.
These guys are getting into lending because they're thinking, well, the returns on a Share
where else are you going to go?
Maybe a bit risky. Hold it in cash, or do we park a couple of $1 million and lend it to a business that we believe in at a 15% return? And if you can structure it appropriately, there's a lot of money coming out of Sydney, Victoria. You may not want to take the Victorian one right now. It comes with a bit of.
It doesn't actually come in actual cash.
No, it comes in a sniffle.
That's right.
And Queensland, but there's a lot of money. There's a lot of private money in Australia that's not getting the returns historically where they have got returns, and they're prepared to take on more risk to get those returns.
And there's something I've talked about for a while. You think of it as mezz debt, but again, it's a bit like if you say factoring. Everyone goes,
Yes.
factoring is an ugly word. Mezz debt, it's a bit ugly. It's not ugly, it's factoring, it's a bit ugly, but then you change it around to cash flow management, you change it around to maximising returns, that's not quite so bad. And again, I've just said businesses chase hurdle rates that are unrealistic in today's environment. A 15% hurdle rate, I would say, is unrealistic expectation in today's world.
Oh, of course.
I think business confidence comes into play, and the lack of business confidence is key. But if you can get 5% plus return on your capital, you go, well, that's good in today's world.
If you're making a profit today at the moment, it's really good. Is that right? That's what I'm thinking.
That's a plus.
That's right. That's not
I can
losing.
take you to any bank.
That's right. Thanks. That's right. It's the ones that are losing money we need to help.
But there's there's a huge influx of alternative players into the lending space, and
which that should give our small business owners, some confidence that
Well,
out there, or the ones that want to make a move.
a lot of fintechs, a lot of different offerings, a lot of niche products. They're complex, but for the right business, they might suit. They may not. They may suit. They may not. But we need to, myself and Mike, my business partner, not so much the Don. We need to be across everything that's out there and available, because ultimately, forget the headline rate and the cost, but if it makes commercial sense, do the deal.
Why wouldn't you do it? That's right, of course. Yeah, do it. That's right.
Yeah, exactly.
Yes. So have you got out to any local wineries lately here in South Australia, self-supporting the local economy, as we're all encouraging, obviously the Don was visiting South Australia and checking out the wineries. Where would you suggest to go? Have you got any ideas on that?
Well, Ashton Hills winery has, I'd say, arguably Australia's best Pinot. And if you go there for a wine tasting, you get a cheese platter, and then you can go on to what's the pub at Verdun?
Verdun.
I don't know, Don.
I thought you took him on the tour.
Verdun, the Verdun? Is it? I
Not
can't.
the Verdun. It's not the Verdun.
Uradla? No, that's in Uradla.
That's right.
You get a cracking meal there, and then if you want a dessert, Harmondolph Hill, you get the. They don't do the chocolate anymore. The chocolate wines, but Adelaide Hills wines still.
Anything from South Australia, check it out.
Look, Mike and I are big supporters of local establishments all over the state that will feed us and water us. So
your clients and your prospective clients.
Exactly right. So we've been in hibernation for 3 or 4 months now, and we're hitting it pretty hard. So
time to get out
the
there.
corporate card's hard. So if you're keen on a drink and a feed on HT Capital,
And you want to find out a bit more about the commercial
absolutely
lending market,
and we can drag the Don out at any time.
You want to bring the Don as well.
Well, the Don is technically retired, so he's pretty much.
He's happy for a lunch and a wine.
So you could go to the Stanley Bridge Tavern at Verdun for that.
There we go.
Yes,
That's
very good.
the plug you were looking for.
Because some of our audience may not be in South Australia, they may be around the world, and if they're checking out this video,
No, exactly.
we want to make sure that they.
But also give a plug to some of the remote regions too, because you've got KI, which is in great.
Right.
There's some beautiful places in KI, and they really need the support. McLaren Vale, which is we're tapping into today. I love the south, and then don't neglect the York Peninsula too. It's a beautiful place. We've
A couple of breweries over there now. And
micro.
they got some-
and a couple of distilleries as well.
Yeah, what's a
So if you
cow?
don't just want wine, you can have some beer.
What's a Cowie Brewery over in Middleton?
Cowie? Okay.
A cracking range of beers over there. It's a new hub for.
The microbreweries, eh?
Yeah, it's fantastic. So head over there and
check that out as well. 'Cause you haven't been there for a while.
No, absolutely. And you can even, if you take Mike, he can drag the boat along and take you out for.
Sounds good.
My sea legs aren't very good those days.
Good on that. That's right.
well, probably due to the few drinks the night before. It brings it to a head generally in the morning.
Yes.
Out in the blue water.
All right. Well, thanks guys for coming along. I don't know if there's anything else you want to add to it. Don, thanks for coming along. I did have a question. I haven't got it at the moment. If we do come to it, I'm going to throw it out there just before at the end. But have you got anything else you want to add?
No. Just thanks for having us. We love doing stuff like this.
Yeah,
and,
appreciate you coming along. Thanks for bringing along the Yangara estate.
That was the Don. He must have picked it up on his 1980s tour of Adelaide.
Oh, that's right. Yeah. So it is an economic question. I had it before. I lost it, maybe because we've already started sipping wine. But in regards to investment outside of America, Don, there's not too much that you actually do. Is that right? You know, is it like less than 10% of the companies invest?
American companies externally.
Yeah, it's a very low number. I think all countries don't really invest outside of their own country. There's a small
Except for
portion.
China.
Apart from China. I was wondering if you were going to say that. That's right.
China. Don't start talking to me about China.
That's right. But so China's got a strategy of doing that very well, and they're doing it around the world. But America doesn't do it that well. Australia.
Well, America did it in Japan and China. That was
okay.
That was
They haven't done it for a while. I should say.
The US is spectacularly insular. It wraps itself around, and it's trying to be more so with
cotton wool.
With Donald in charge.
Oh, with yourself being in charge.
We want to bring back manufacturing. We want to say fuck the rest of the world.
We can operate on our own.
Can you make Harleys anymore? Can you make Harley Davidsons onshore?
Don't we make some of the Harley parts here in Australia?
Yeah, I think
we did it pretty well in China. But it's bizarre because you've got this doyen of free markets going against free markets. I mean, surely global trade is global trade, so it does my head a little bit. And
yeah, that's what I was thinking. You know, it should be more, but it's actually not.
No.
It's unusual.
And then you look at Australia. In Australia, the common benchmark is that the Aussie dollar gets traded the fifth most commonly traded currency in the world, but on GDP we're about 22 or something. So there's a great mismatch there. So we are truly a free economy. When I say we, Australia.
Australia, not US.
You are.
We, that's right.
Very insightful, Don. Yeah, I didn't know you read that.
Very good.
But, one of our recent articles on incognitomarkets.com.au was Australia now is a communist country by virtue of what we are. The business has been shut down and the government supplies all. So America
hasn't done that.
Hasn't done it that much, and I'm
at fault
massively in favour of opening everything up.
But no one listens to you, Don, in America or anywhere around the world. So how are you actually?
Melania or Ivana or whatever it is, she never listens to that.
You've just got both your parties fighting, and you just get out there and get hammered.
The nature of global economies versus local economies will be one of the major interesting changes of post-COVID world. It'll be interesting. Some things may be better, some things may be worse.
I actually have an opinion on this because I think China is in a huge transition from a manufacturing, a production economy into a consumption economy. And cost of labour in China is actually increasing, and it's bringing into the fold other economies that have been, I guess, overlooked. So if you look at Indonesia, for example, so their cost of manufacturing right now is significantly less than the cost, but it hasn't got the investment. But that's where the Chinese investment is going, and that's, I think,
if they're following there, we should be, and you should be.
And I think you'll find a lot of manufacturing starting to be offshored out of China back into other markets like India and Indonesia.
Where those markets need to catch up.
Exactly right. So it's going to be a dynamic 20 years, I think, and you can put your negativity hat on and get worried about the whole world, but
or put a positive hat on and follow it through and be part of it.
Absolutely.
And I know we're running out of time.
Yes, so we are going to
pushing Australia and the UK and the US. Pushing China now, is that appropriate to put them back in their box, or is that crap timing to set the world balance differently. I don't know the answer to that. What I know is that ScoMo's been a bit too aggressive in his approach to China in the last
He
few
definitely
months.
has been very aggressive.
US, I don't know. They seem, when they were well on that track, so there was nothing new there. But the UK, Boris is
But it's in the-
now poking them in the eye with Hong Kong. So
It's in the US's best interest to bring any, not physical conflict, but any intellectual conflict or trade conflict earlier, because the balance of power is shifting.
Yes.
So why would the US wait to instigate a discussion, a heated discussion? Because every day they wait, they're actually getting weaker.
Yeah.
So it's in China's best interest to wait and play that long game, a bit like HD Capital. Whereas it's in
hit the ball off further than you.
they've been to the gym. But it's in the Don's best interest over here to potentially reshift the balance of power ASAP.
Yeah, and my modus operandi is divide and conquer, so I will ramp up my rhetoric and my aggressiveness massively over the next few months in the lead up to November, when Sleepy Joe, Corrupt Joe, I go head to head.
Thanks, guys. We're going to have to call it a day.
No, that's all right.
Cheers for coming. Cheers.
Thank you. It's organic.
The organic
wine.
South Australian wine. Thanks for tuning in.
Excellent.